In this video for A-level business students, we're going to be having a look at the topic of income statements, or as you might have heard them referred to, profit and loss accounts. We're going to be having a look at how all of the figures within them are calculated, as well as what they mean. So a useful starting point is to probably explain what an income statement is. It forms a part of a business's annual accounts, a set of documents that the business will prepare at the end of every financial year that it will submit to its shareholders, as well as submitting to the government of the country that the business operates in as well. And in this document, it's a report of how the business has performed during the last 12 months. It will detail all of the income that the business has made through all of its different services or products that it might produce. And it will also itemize all of the business's costs or expenditure during the last year as well. So it goes through all of the funds that the business has generated through its activities, as well as all of the money the business has spent running the organization. Now, by assessing those two different measures of the business, we're able to calculate how much profit, or if it's been a bad year, how much of a loss the organization has made during the last 12 months. We submit this document to the government for tax purposes. We submit it to the shareholders so that they can assess the financial performance of the business over the last year. But what we want to know about for exams is, what do they look like and how are the numbers in them calculated? So it's quite common for examiners to show us an excerpt from an income statement in the stimulus material they give us in exams. Maybe that's with a view to perhaps doing some calculations, such as some profit margins, maybe some financial ratios, or maybe it's just to give us an insight into how the business has been performing financially. We should get used to seeing some numbers in brackets at the top of these income statements, which just means whatever numbers you see in the document that follows, you should add that many zeros to the number. Now, this is what's contained within an income statement. The first item you will see will be how much revenue the business has made. Look out for examiners maybe using some different terms. They might call it sales revenue. They might even call it turnover. But this just means the money that the business has generated from its activities during the last 12 months. Remember, we're going to add 3 zeros on here. So this number isn't that the business has made £5,000 revenue. It's that it's made £5 million revenue. But businesses, of course, don't get to keep all of the revenue that they make from selling their products or services. First of all, it will have cost them lots of money to manufacture or produce those products in the first place. So the second item you'll see in an income statement is the business's cost of sales. That's literally just the cost of manufacturing the good that the business is selling or producing the service that they are offering to consumers. And when we've got this cost of sales, we can deduct that number from the revenue that the business has made to give us our first type of profit, which is known as gross profit. In this example, if a business has made £5 million in sales revenue selling their items, but it cost them £1 million to produce those items, then their gross profit is going to come in at £4 million. But businesses don't get to keep all of their gross profit either, because the cost of producing whatever you sell are not going to be the only costs that your organization has. As well as manufacturing your goods and services, you're going to have lots of other expenses as well, such as marketing, maybe training, administrative costs. So we've got to deduct all of those costs, not from the revenue, but we've got to deduct those costs from the gross profit to get our second classification of profit, what's known as our operating profit. Now, in this example, if our expenses come in at £1.5 million and our gross profit was at £4 million, then we can clearly calculate that our operating profit for this business is going to be 2.5 million. But then the next section of an income statement is often a little bit confusing for students. What we're going to do next is we're going to have a look at whether the business has made any other income aside from the sale of its products. If you imagine that businesses have got large deposits of cash that they're storing in their bank account, we know that when we have cash in a bank, we will earn interest on that money. And it's no different for businesses. They might have hundreds of thousands, maybe even millions, in some cases perhaps even billions of pounds sat in bank accounts. And during the year they will earn additional income from that money in the form of interest. For example, in this business we might have earned an extra £50,000 in interest payments from our bank from having money deposited in a bank account. But we also need to do a little deduction at this point as well, because lots of businesses have some debt, and you know that when you have debts, you have to repay those debts with interest on top to whichever financial lender has given you the loan. So in an income statement, as well as adding on any interest that the business has earned from having money deposited in its bank account, we're also going to deduct any interest that the business has had to pay to financial providers for the loans that it has borrowed from them. In this example, we've earned £50,000 from having interest on the funds in our own bank account, but we've spent or we've paid £150,000 in interest to financial providers. So what we need to do is to add on that finance income to our operating profit, but then from that total deduct the financial costs to give us what's called the business's profit before tax. If we add on 50,000 to 2.5 million and then deduct 150,000, it will leave us with profit before tax of 2.4 million pounds. Now we're nearly there, but there's one important stage of an income statement left to do, and that's to deduct the taxation that the business then pays to the government on its profits. If this business has made profits of 2.4 million pounds, then it will also have to pay some taxation to the government. We take whatever that taxation figure is, in this case it's £480,000, and when we deduct that figure from our profit before tax, it leaves us with our final classification of profit, what's known as our profit for the year after taxation. And if we deduct £480,000 from 2.4 million, it will leave us with our final profit figure of £1.92 million. And there is a completed income statement. Now, it's possible that we might need to do some calculations in an exam to fill in parts of that income statement. More likely, examiners might give us the figures and expect us to do some calculations with them. But that will help you understand what this document shows us in an exam, what we can learn from it, and how the different numbers within it are calculated. Look out for more Taking the Biz tutorials coming very, very soon. In the meantime, good luck with your revision.